All right, guys, how we doing? What a morning. What a morning. What a day. All right, guys, how we doing? All kinds of stuff going on, but we're here. Let's get it. All righty. Show you my mug in a second, uh, and then we'll begin. All right, all right, all right. Where are we? Let's put this up on the screen. Take this off. And here we are. Ade, good to see you. Well, good to see you virtually. Looking forward to seeing your face at some point. Right, so it's been a great week. For me personally, four trades, 3 wins, 1 loss. The loss was kind of cheeky, so I didn't sweat it too much because I was trying to catch a fade, no pun intended. And it is what it is. So let's get straight to it, shall we? For those of you from the Telegram chat, you're welcome. If you are stumbling into us online, this is Israel Keys Wealth Academy. This is our old channel. This is the channel with Ade. This channel has like 100 plus free video content on everything from how to set up your MT4 platform back in the day when we used MT4, all the way up to high end stuff. I've had several professional traders message me privately and say the stuff on there that's free is stuff they charge thousands of dollars for. They were trying to get me to make it not free. I don't really care. Trading's been good. God's been better. And there's a whole lot more to potentially charge for if we want to, as we have in the past. When we're done, might talk a little bit about our mentorship scheme for those who are interested. Yeah, it's there. It's basically this particular channel. And some of you, if you're new, you know the new channel, the Plural Markets channel. That was set up about a week and a half, it's about a week ago. And we're keeping them kind of separate for two different things. We were trying to go live on that channel. Turns out YouTube, even though they told us we couldn't get our software to connect. And so we're just going to link these two videos as a collaboration. In fact, while I am speaking, I should be able to go and do just that. So I'll do that while we're talking. So, great week. If you are not subscribed, please do that right now. We'd be very grateful for you to subscribe right now as we speak. And also, if you could also subscribe to the Plural Markets channel, you will see that at some point during this live, if we can get that to work, if my team can get that to work to collab this live video with it. What do you get? You get free market analysis, free signals as and when they come, but you get a systematic breakdown. And this is the most important thing. This is not a signal service. It is a systematic breakdown of how to approach the market like a professional trader. You will learn how to come at a chart or fundamental analysis or market news, whatever it is, we cover. And the Plural Markets channel is an application channel. The Israel Keys channel is more of a theory channel. So in Plural Markets, we're basically saying all the stuff we learned over there, look at it live, which is why we wanted to put this live video on that channel, but hey, I've explained what happened. So let's go. Enough talk, enough jabber. My name's Israel, as many of you know, and I'm looking forward to being a partner in your move from struggling or successful trader to whatever the next and the next level is in your trading journey. With no further ado, let's go. Right, so 1 second, just want to get, okay, so it seems like we can't make this a collaboration video while it's live, so we'll look at doing that after we're done. All right, so we go into every single week at, well, you should, but especially here at Plural and Israel Keys, we're going to every single week with what we call a market watch list. No more than at most 5 asset classes we're stocking. And we will usually execute trades on no more than 3. And it's not uncommon for us to go in with 2 market asset classes we're stocking and to execute trades on only 1. Please write this down. When you're trading, less is more. I can't stress this enough. Less is more. Your human brain's not designed to manage several things at the same time. Focus is better. The market is almost infinite. You are going to be a far more successful trader if you narrow in on a select few pairs or asset classes at specific times and train yourself that way. Whatever I wasn't stocking at whatever time I wasn't stocking, charge it to the game. So for instance, I'm a New York trader. Once a week, I might trade London. I don't care what happens in London, because when I get to the market in New York, 4 out of 5 days, I will be able to use London's information to trade in New York. Years ago, I used to be a London trader, the exact opposite. I don't go around saying, man, I missed that trade. No, because I've got a life, as should you. You will be far more successful with trading if you have a life. If you come to the chart specifically like a sniper to make it for what you think it'll give you at specific points, specific assets, specific levels, and most important, specific times. FOMO will bleed your account. Fear of missing out in trading is perhaps the #1 cause of failure. So we're going to go through NASDAQ futures, gold. We're going to go through cable, that's GU, fiber, EU, and we might touch oil. So we had a video at the start of the week that looked at what we were looking at in NQ. I'll just recap it in 2 seconds. You know what? Okay, so basically, this is what we started the week expecting. You know what? Let me change this to something else. Another ticker that still trails NQ. And that way the chart's blind. Welcome everybody, come on in. So, when the week began, this is what we had. This here is the beginning of Monday. So this, with my indicator, this dashed lines, this is Monday, but this was the end of Friday. And this is documented. It's on the Plural channel. Perhaps I'll just put the link of the Plural channel in the description so you can take a look at it, so I stop jabbing off about it. But we came into the week looking at NASDAQ futures like this on a 4-hour chart. That reminds me, based on how I trade, 4-hour chart's my signal time frame. You need to ascertain for any particular setup what your signal time frame is, meaning what time frame tells you start looking for a trade. Technically, that's the time frame you're trading. You need to go 1-2 time frames up and 1-2 time frames down. You go up to get directional bias and key levels. Write this down. You go up to get directional bias and key levels. You come down to get precision entries. Let me repeat. You pick the time frame you're trading. That's the time frame that tells you start looking for a trade. You go up 1 and sometimes 2 time frames to get directional bias and key levels. 1 time frame up gives you directional bias. 2 time frames up gives you key levels. You come 1 or 2 time frames down to get precision entries. That's it, right? That's it. That's the game. Pick a time frame. That's your signal time frame. That's the time frame in which your setup tells you start looking for a trade. Before the signal, someone's trying to reach me on the phone. Before that, you go up. 1 time frame for directional bias, 2 time frames for key levels. You come down 1 or 2 time frames for precision entry. Done. That's multi-time frame analysis in a nutshell. So the key setup that I use, which is used by most professional traders all around the world, those who actually know what they're doing, is you're looking for a liquidity sweep and a reaction. That's it. And so on the 4-hour time frame, and I want you to go back on any asset class as far back as you can and see if you can spot this yourself. Whenever price, I'll show you this in the past here, whenever price sweeps a 4-hour high or low, right? So that's an example right there. That's a 4-hour low that was swept. And reverses with a candlestick pattern on the 4-hour chart. 7, 8 times out of 10, that's the start of a profitable reversal. It happened there, 4-hour reversed, it retraced to pick up an entry, and it went. Was the opposite true? Yes, it was. What was the next time price reversed in the 4-hour chart? Well, that is, whether or not you realize it, that is a 4-hour high right there. This candle there is a 4-hour high. There's a lower candle to the right and to the left. Price nicked it, reversed, came back to grab a retracement, shorted, came back again, and then fell out of bed. Is this consistent? Let's check. That's another 4-hour high, right? Price nicked it, reversed, came back for a retracement, fell out of bed. What about the other way? This here, you need to be able to spot swing lows with a 3-candle pattern, not just a 5-candle pattern. That's another 4-hour low there. Now, this is free. This could feed you for life. Just this could feed you for life. 4-hour low, price runs through it, reversal. This time didn't even give you a retracement, off it went. What about the next time? Well, that would be here. Right? 4-hour high, price runs through it and reverses back through it on a 4-hour chart. This, again, didn't give you a reversal. It just fell out of bed for the whole week. The next week, it did give you a nice little fib reversal. But what did that fib reversal do? It took out an intermediate 4-hour high, right? And then reversed. Just tell me if you can see this. When the retracement came, what did it do? It took out a 4-hour high, right? And then reversed. What happens after that? Boom. What's the next swing? Take out a 4-hour low. Now, the truth is, this doesn't just happen on the 4-hour chart. It happens on a daily chart. You can trust this on anything above a 4-hour chart. I wouldn't use this on, I mean, it still works on 1 hour with a lot less whatever. But you don't need to get this on lower time frames because this tells you to go look for something on a lower time frame. Let me know if you're following me, if you're with me so far. This is a signal that tells you there's a trade in the offing. We then drop to it, so we don't need to look for this. Technically, this is what we're looking for. The entry on the lower time frame is the exact same pattern. We just trust it because it's happened on a higher time frame. Say yes if you get me. Again, this is beautiful. Takes out the low, 1-candle reversal, and we love those 1-candle reversals. Why? Because if it's a 1-candle reversal, it almost always gives you a reload. There we go, right? And what happened? Boom, it went up. There we go. Now, once in a while, you will have a false signal. And we have other tools that help us filter this out. But let's assume you're just trading just pure price action, and hint, hint, the other tool is volume analysis. But let's assume you're just trading price action. Well, okay, so price takes out this high and reverses. The truth of the matter is, on a lower time frame, this here would have given you a very good trade. Okay, let's go to 15-minute time frame. Look at this. It would have given you a viable trade, just not a long-term 4-hour trade. But look at this here. This is that piece of price action that we were just staring at, right? Well, what do we do on a lower time frame? The exact same thing. You look for high, that's taken out and reverses, but this time you wait for a change of structure or market structure shift. You don't just take the reversal in the lower time frame, you wait for it to change structure, right? So takes out the high, runs through the low. You just wait for it with a fib. It's like taking candy from a baby. No, that's not what I want. I want a fib. You just wait for it with a fib. High to low. All right. Textbook retracement. Well, I should have drawn the fib the other way. But you get the point. So 61.8 is 38.2 on the other side. Textbook retracement. And then here is where you wait for, at the fib level, you wait for the engulfing pattern on a lower time frame. That would have been there. So, and I think I did take this trade, if I'm not mistaken. I think I put this up on the Plural channel last week that I took this trade. We want to short entries on the engulfing of the pattern of the candle, stop loss above the high, and I mean, this trade gave us 3.6 risk to reward in basically an entire market session. And there you go. Yes, it came back up, but it didn't nick the stop loss and then continued until there. But I do agree that on a 4-hour chart, it didn't give you that nice long run of price that we like. And so even if you want to chuck this down as a loss, we've had how many? 1, 2, 3, 4, 5, 6, 7, 8. And then on the 9th time is the first trade you could potentially have lost if you were getting greedy for anything more than 3 to 1. All right. Now, this is the beauty. Even when you lose, it's not revenge trading. The market's just tipping its hand and you know what's going on. What's going on here? On a 4-hour chart, price has changed direction. Look, there's been a 4-hour change. On a daily chart, what was the directional bias for that day? This is the day here. So I want to ask you a question. If you are a trader worth your salt, we see this set up here, and this is how you spot it on a daily chart. You see a daily candle, price nicks the low of that daily candle with the next day and reverses and engulfs this candle. This is a sign we're bullish. We're bullish there. Here, price came back and rejected sharply. So we're still bullish. We formed this candle, and again, the same pattern. There's an engulfing there. So nothing in this run of days tells us we're bearish. And so back to a 4-hour chart, this is a 4-hour signal we would not have taken if we used the higher time frame to confirm. We would have known that this was most likely a continuation manipulation. But even if we lost there, fine. What happens afterwards? we see the exact same pattern going in our original direction. 4-hour low, and I definitely did take this trade because I put this up last week on a video on Plural Markets channel. Textbook, right? Goes in, rejects sharp, engulfs. You could very easily, without, if you're thinking, I can't be bothered, one second. If you're thinking, I can't be bothered putting up, going to a lower time frame, that's fine. Just trade it as a 4-hour, trade it as a swing trade. There you go. That's your risk. And so far, you would still be in that trade to the tune of 4.521. Now, of course, if you drop down to a lower time frame, you can refine this, and that's why we go to lower time frames, because it makes our entry far more precise with far less risk. So, and I remember this trade. This was a very nice trade last week. Okay, so let's get rid of that. So we now know this is the level we're looking at, right? If I'm not mistaken, that's the low. I call these trigger lows or trigger highs. So now it's by a pip, but that's still valid, right? That is still valid. Secondly, we opened up this week. No. Hold on a second. Yes. We opened up this week with a gap down. And in the pre-week analysis video, I mentioned the fact that I expected this to happen between Tuesday, London and New York, for price to gradually find its way down, take out that low, and react. The week opened on Sunday and it gapped down straight away. That's the market telling you, I'm eager, follow me, right? So my first trade of the week was just to fill the gap, literally. And I think I put that on the group in Telegram, on the channel in Telegram. First objective, fill that gap. Why? The gap has opened into a predetermined level where we expected to see something happen, and we did in the 4-hour chart. Ride that gap, close the gap. That's it. How do you ride the gap? Price came back down and reacted, and on the 15-minute chart, broke market structure several times. Broke it there, and then broke it there. But this is the one I took, because the exact same pattern happened on a lower time frame. A low was ran. So I know that this is most likely going to fill this. I'm not in down here. You can. That's a different setup all by itself, but you'll get far more losses on that. I like high probability setups. I've been trading in some shape or form since 2007. I lost about 35,000 pounds over the first few years. I paid my tuition. I'm not looking to be a millionaire overnight. God's been good. I've learned to wait for high probability setups and ignore the noise. So look at what happens here. It blows through and then comes back in here, right? It blows through and then comes back in there. This is your entry. That's your entry right there. Your entry is at the point. You don't need to wait for them. This is the way I trade. I don't wait for candles to close because I realize candles are just snapshots of what's going on. I wait for levels to be passed or triggered. At whatever point that this candle blows past this one there, for me, that trade is live. Now, you can put your stop loss down there, but if I'm right I'm putting it here. That was my stop loss. First price objective is to close the gap. And I took a gap closing trade on gold, if I'm not mistaken. But notice how much farther this trade runs than just closing that gap. Now, I got out because I don't like staying in trades overnight. Just me, personally, especially in the days of Donald Trump as US president. One tweet can blow your account if you're not careful. But if I'd stayed in this trade all the way through, I want you to look at the fact that this would, oh no, what have I done? Let's get this back there. Right. The fact that this would have been a 15-to-1 trade. Entry on Tuesday, come out on Thursday. This is how I used to trade back in the day. Look for an entry on Tuesday, hold till Thursday, done. Again, this was pre-Donald Trump. So how do you know that it's safe to hold this trade for 3 days all the way up? That's where you go back to the higher time frame. What time frame are we currently trading? The 4 hours. So first of all, what would the next 4-hour level be? Now, this was our entry, right? Our entry was in the middle of a 4-hour fair value gap. So at some point in the future, we might come back there. But how do we know to hold? So just get rid of this now. No, I'll leave that there so you can see the trade range. If you're looking as a 4-hour trader, what's your first target? Here, right? That's your first target. You go all the way back there. Let's see, what would this have been? I think this would have been a 1-to-1 or 2-to-1. So that would have been a 2-to-1. So yes, we're entering this trade on a 50-minute time frame, but remember our signal is from the 4-hour time frame. So we're going to be trading it like a 4-hour trade. First exit, obvious exit here, right? 2-to-1. There you go. And you would have done that in 1 day. You don't go broke winning 2-to-1 trades at over 50% success rate. Quite the opposite. Now, this is what you saw on my screen when we started today, because this is how I analyzed my exit. Throw up a fib from the high to the low, right? Fib from high to low. If you are in sync with the institutions, because we're trying to teach you, or we're trying to learn, I should say, all of us, even those of us who are instructors, we're trying to learn to trade with institutions. One of the ways you know you are trading with an institution, a market maker, a bank, a central bank, a large hedge fund, Judge Soros, Warren Buffett, the rest of them, is you should see that move respect institutional tools. A Fibonacci is one of the oldest institutional trading tools. I'm telling you, the guys at Goldman Sachs are drawing their fibs on their chart. You best believe me, because I know some of them. Right? They're drawing a fib tool. Now, according to this fib tool, first target was basically level 1. Second target, 1618. Third target, 2618. Right? And notice how price reacts near those targets. When it crosses this, it comes back a little bit, doesn't quite touch. When it crosses this, it comes back almost to the point. And these will be the final targets. But we don't just go for fib targets. This is where the higher time frame comes in. Let's go to a weekly chart. Okay, now, if you were trading this as an institution, what are the weekly levels you would be looking at? Simply old weekly highs or lows. That's it. So let's draw out in the trade path. This would have been a weekly level. Let me see. Let me put my color code. I put anything daily and above in black, 4 hour in purple, anything under 1 hour and under in blue. So we need to know when we look at our chart on a lower time frame that that is a weekly chart. Weekly low. Okay, so this should have been your first proper exit, which is where I got off. Like I said, I don't like holding trades over days. Once I hit a target during a specific day, I like to come out and look for the other day to give me another entry. Again, this is just trading in the days of Donald Trump as US president. All right, so there we go. That's it. Second weekly target, right? Here. Now, you're saying, Israel, that's not a weekly high. I know it's not a weekly swing high, but it's the high of a week. Does that make sense? It's not a weekly swing high, but it was the high of a previous week. And markets respect previous highs, lows, opens, and closes of everything from a daily chart upwards. Just if you're a scalper, just draw up the daily high, low, opens, and closes from every single daily candle in your trade path over the last 20 days and sit back on a 5/15 minute chart and feel like Nostradamus. Well, the same way the daily works for 1 hour and below, the weekly works for 4 hours, and the monthly works for daily. I talked about all this in the pre-week analysis video, and all this is on this channel in the free content here. And the final one would be here. So let's go and see what price did at each of those levels, shall we? Let's drop down. 4 hour chart. So let's take, and notice that this level here is very close to the 1618. This level here is close to the 2618. Okay, this one's kind of in no man's land. So let's take off the fib chart, fib tool. So we've established going back to this high gives us 221. Going to that weekly level gives us 4.621. And what do you know? Right? I'm sure this is a coincidence, right? Wink, wink. Wink, wink. That price gets to that weekly level and reacts. In essence, that's price telling you this is a bus stop. You can get off, new people can get on, you can stay on, but it's like taking the train from Sheffield to London and you pass through Nottingham, Leicester, Northampton, Milton Keynes, and then London. This is Leicester. For those of you in the UK, you know what I mean. This is Leicester. This is where I got off the first time. Well, where's the next bus stop? There. What happens there? The exact same thing. Price reacts. That's another opportunity to get out. Where's the next bus stop? There. And now this would have given you 10.6 to 1. Where's the last bus stop based on the levels we've drawn? There. That's 15 to 1. And what do you know? Price is reacting here again. Now, how do you know when this move is ending? Just wait for a 4-hour engulfing candle the other way. That's it. Now, we got one here. So, This would have been a good time. And this was my only loss of the week, because when I saw this 4-hour engulfing candle, I thought, okay, we've been going up for 3 days or 2 days. Maybe price wants to come back and retest some of these levels. And so I loaded up for a short. You guys saw it. And then we found out that no, price was just faking us out for a further upward load. And this here, even if you didn't get in here when I got in, this, I wouldn't have advised you to get in here. This is a bit dicey. But this was the market offering you another chance. Because this section of price action right here, what would have been a signal to come out would also have been a signal to get back in. Why? We see the exact same pattern. That's a swing low, right? On a 4-hour chart. It's taken out, right? And what happens? A 4-hour engulfing. In essence, get back in this trade. Of course, we've mapped out our weekly levels, so we know what our targets are. This doesn't make any sense as a target because it's too close to the trade. So that would have been the next target. What do? We drop down to a 50-minute time frame. You could do 1 hour, but I believe 50 minutes is the best. So that's the 4-hour level. We go through, we push back up, right? And we break structure. There. Now, as a trader, you've got to teach yourself, right? Because a lot of trading is done in this day and age now by algorithms. I'm not saying an algorithm moves the market. I'm saying people make trading decisions based on algorithms. If they're making trading decisions, 1 second, where is my phone? Okay. 1 second. Something seems to be going on with the stream. Anyway, that's fine. Something seems to be going on with the stream. I wonder what's going on. Anyway, let's push through it. This there, right? I know it only looks like a tiny pip. That is a valid change of structure. Because when people are coding their algorithms to trade, they're not sat in front of the computer telling the algorithm that that's a false spike. The algorithm knows it saw a spike. That's a break of structure right there. Price pulls back into this order block and gives you a 15-minute engulfing pattern on the retest back at that level. Boom. We're long. Along there, at the point it crosses that candle, we have two decisions. If you're aggressive, you put your stop loss there. If you're more conservative, you put your stop loss there. There is very fine. Why? Because we've already taken out an intermediate low. See that there? Now, if there was no intermediate low taken out, I would put my stop loss here, because many times price wants to do the exact same thing. Sweep an intermediate low, take out. See, somebody has to lose a trade for you to win it. Just think about that. Someone's stop loss has to be the impulse for the move in which you want to profit. So wait for them to lose. Anybody who try to be smart there, you know, there's some 1 minute, 5 minute scalping demons for whom that looks like a big high, big low. It looks very tiny in a 15-minute chart, but on a 5-minute chart, that looks like a nice, juicy, scrumptious low that somebody would have put their stop loss behind. We get in there, right? And we hold for this level at least, right? That's pretty much 10-1. And if you are a scaredy cat and you put your stop loss beneath the controlling low, That's fine. That's still 6 to 1, guys. Can I interest you on a setup that gives you between 4 to 6 to 1 on a regular basis on a 70 to 75% success rate? You're looking at it right here. And you just come out there and then you move aside. Now, if we go back to a weekly chart, by the way, I'm not going to spend anywhere near this amount of time on the other asset classes. I just want to show you the principle we're looking at so that when we get there. So this is another weekly high there, right? That's another weekly high. So, okay. Now, if we go all the way back in time, there is nothing above that high there. Look, which is why we come out now, because we're now in uncharted territory. We have no idea what price may do above that level. So when do we come out? When we see a 4-hour reversal pattern. And as you can see, one's forming as we speak. If you're in NQ, I would be coming out now. Not saying you have to. Volume analysis and other things may say different, but based on pure price action, this would be a good time to be coming out of NQ right now. And of course, we go back to a 50-minute chart. If we see at this level a change of character and a market structure shift, and I think, yes, we've seen it. That's that. Note it. Look, see, trust me, this is not a coincidence. Look at that. Look at how this change of character happens at this level. So this could be loading for a short. But if you're long, I'm out. If you rode it to the last high in the way, you're either making 6.4% on a conservative entry, or you're making 10% on an aggressive entry. Wham, bam. Thank you, ma'am. All right. So that's NQ. You could have done this as one whole trade throughout the course of the entire week. You could have broken it into 2 or 3 different trades like I did. Entry was, well, signal was there. First entry was here. Second entry there. Now, if you stayed in this trade all the way, somebody is blowing my phone off the hook. And it's actually money related. Someone's trying to get me to do them a transaction, but I'm busy. You should have called earlier. So I think we got in somewhere around there. Let's refine this in a 15-minute chart. All right. Okay, so right, that was our entry. So there, we're in there. Our stop loss was there. Okay, go back to a 4-hour chart. And if you stayed in all the way from there to there without getting out, that's 15 to 1. You don't need all 15 to 1, right? You don't need all 15 to 1. You just need a piece of that pie. So ask yourself, based on what you've seen, do you think you could have gotten from this 15 to 1 an offer 5 to 1, 4 to 1, 7 to 1. That's all you need. You don't need to get off at Sheffield, get on in Sheffield, to get off at London. You can get on at Leicester and get off at Milton Keynes and still be extremely profitable. All right, let's move quickly. So that's NQ. Let's do gold next. All right, let's do gold. I want IC markets. Yep, that's my broker. And I'm not selling anything they have because I'm not affiliated with them. I just use them. Maybe I should get in touch with them to sell their brokerage. See if I can make some cash on the side. Right, so this is gold. Now, as you can see, I pre-analyzed this. But I'm going to take everything off. Right? Let's start from scratch. And if you are in the Telegram, Simon Devante gave you a very beautiful gold signal for a scalp this morning, a scalp of 240 pips. That's how we roll. All right, so the exact same thing, right? What time frame are we trading? The 4-hour time frame. You can use this whatever time frame you want to shift up and down. We're trading the 4-hour time frame. Okay, so again, and it actually helps to go back and do this before the point you want to enter the trade, just so you understand what's going on, right? Just so you understand what's going on, even if you're not going in. So what's going on here? Well, way back in December last year, there was a 4-hour low there. Let's put that in purple so we know we're talking 4-hour chart. So that 4-hour low from December was rated there, and there's a reaction. And that reaction has begun our macro move. It would also have been, I believe, a monthly low or a weekly low, if I'm not mistaken. So, okay, so now we're going up. So actually, technically, this should be in black because it is from a higher time frame. So let's put that in black even. So, all right, cool. So price then begins to react. So let's check that we're in sync with the phases of the leg, right? Now we're going to put these in purple. So we have that, and then price reverses, comes back down here. Keys of this 4-hour low there, and starts to move to the upside. Comes up here, right? Takes out this high here. One second. Takes out that high there. Reverses. But as you can see, the dominant direction is up. And so the market's clearly tipping its hand. Takes out that low there. And then reverses again. Now, I should add this. You are more comfortable or confident when you see a consolidation going into your signal. I did a whole series of videos on this channel. Market phases. Markets move in a specific order: contraction, manipulation, expansion, retracement, target. MERT, that's my anagram. Other people have different versions of it. When you see, okay, when you see a contraction on any time frame, think of it as the beginning of a move. In essence, a contraction is the market telling you, I'm accumulating orders, getting ready to pick a direction. So now, this is the moment of truth. This was last week. I didn't trade 2 weeks ago. I did trade last week. We can see this pattern here. We have a consolidation. We form that low. Then a nice impulsive move. Look at that. Like I said, if you just want to trade it for low risk to reward, but better peace of mind without worrying about a lower time frame entry. No, not you. 1 second. Not you. Let's get rid of the Pine script. Yeah, you. Just put your entry there. Put your stop loss there. Where you going? Previous time frame level. Right? So we go to a weekly level. A weekly chart. What level would we have keyed off on? First, that's the low of a week in the path of our trade, right? That's the low of a week in the path of our trade. Where next? After this, where next? Here. That's the low of another week in the path of our trade. And don't be surprised if this touches it to the pip and then reacts. After that, where next? Here. That's the low of another week in the path of our trade. And that would be closing a weekly fair value gap. Right now, if you look at this, we are in the process of closing this weekly fair value gap from there to there. So, also I told you opens and highs. Okay, so let's just throw that in. This is the open of a week in the path of our trade. This low here and this open here are very similar, as well as this. So there's no point drawing 3 different lines that are very close together. So we go back down for our chart. First target has already been hit, 2.521. Second target, soon maybe, we don't know, but that would have been 3 to 1. And that's using this wide stop. But of course we're not using that wide stop. Why? Because we have lower time frames to go in and get precision entries. Lower time frame, 15-minute chart. Again, you can do this on hour, 30, 15. I wouldn't go beyond a 15-minute time frame if you're working off a 4-hour level, because then the noise becomes too much to be in sync with the higher time frame. So there we go. That's the level there. And this is why I do my charts this way. I've brought a higher time frame level into a lower time frame, but I know the color tells me that that is from the 4-hour chart. So what are we doing? We're hunting a change of structure, and we get it there. Right? Let's pull that up. That high, price dips into that level, react sharply. Now, if you like danger, if you enjoy being frisky and risky, by all means, when you see this 15-hour engulfing here, jump on this trade. You'll have a lot more losses. You will still be wildly profitable. And when you get it right, you'll get 20, sometimes 25 to 1 risk to reward ratios. But again, like I told you, I'm a pragmatist. Your first job as a professional trader, you learn this when you trade professionally for firms. Your first job is to preserve capital. Your second job is to make a profit. Your first job as a professional trader is not to lose your money. All right, now that's the level there. So Price comes back in and engulfs there. That's it. We're in, at the moment, it engulfs this candle. So there. Now, you got a decision to make. Do you put your stop loss there? Do you put it there based on this? Do you put it there based on that? Or do you go all the way to the controlling low? That is your decision. Right? Now, me personally, for this particular trade, I think I put mine here. Or was it there? I think it was there. I think I put mine there. Based on that low there. Now, if you did put it there, and you go all the way up there, no, I didn't put it there because I got more than 3-1. So I think it was this one. Yes, that one. Or was it? Anyway, let's take that one. Right, let's take that one. Yeah, that's about right. That's 4-1. If you were very bold and decided to go off that, or the rule I normally follow is treat that entry level as an intermediate low. What would be the immediate low before that? That would be this one, right? So let's go there. That's 6-1. Done. Now let's analyze, and of course the same principle goes for the entry for this week and all that good stuff. Now let's use our time to look at the scalp that Samuel Devante gave you guys this morning. Very nice of him, actually, to do that. I was looking at it, but I'm glad he put it up there. So that's why the moment he said looking at gold, many of you saw me begin to smile in the group because I knew exactly what he was talking about. So now this here, he got this trade using volume analysis. But stick with me. All right? Now remember, he's scalping. This was a scalp. So we can't key a scalp off a 4-hour chart, can we? We're going to drop down one time frame. When you're scalping, the lowest chart I would advise you to key your signals off a scalp is a 1-hour chart. Anything below 1 hour, noise. You need to frame it off something. All right? Okay. So this was the frame. Yesterday's high. That's it. This is the high of yesterday. We got to it today. Sorry. This was sorry. High of last week, I mean, not yesterday. Last week's high, sorry, right? We got to it yesterday. And what happened? Price fell off. Notice it is also just above, so that we're going to put that in blue to tell us it's an intraday high. But this high is very close to 2 weekly levels. So this is a place where we would expect from a weekly chart there to be some kind of reaction, either a reversal or a continuation. And on a 1-hour chart, we see the exact same signal, same process as a 4-hour chart. We've just dropped the time frame. Price nicks that level and gives us a bearish engulfing. Right? Okay. One quick second. Someone's trying to reach me about something. Okay. So this here, from a price action perspective, forget about volume analysis. Like I said in the group, this is the Bible. Volume analysis is prophecy. Prophecy is great. It takes the Bible to a new level, but this is the foundation. So this reaction there tells you, let's look for a short, potentially. Now, where are we looking for the short? Well, ta-da! Sorry, wrong. Okay. So, can I interest you in this order block right there? I'm sure I can. How do I get rid? One second, let me get rid of that. Okay. Right. So there's the order block there. Look, it's classic price action, same thing. Notice as well that there is now an intermediate 1 hour high there, which gives the exact same signal. Now, this is why I like the 4 hour, because you're going to see several fake outs on the 1 hour. This here is fake out. Let's see which high is higher. Yep. So if you try to get in on this engulfing here and put your stop loss there, you'd be faked out. But technically, that's not an engulfing because this candle has not been engulfed. This touched this and reacted. So this is the first true reversal signal here. This one there. And that happened at 5 a.m. in the morning in the UK and in West Africa. So that's the signal. What do? We wait for a retracement. Right? What's the level? Can you see that, everybody? Ade, if you're still there, what level is that? 4830. Right? What was Samuel Devante's signal? Short gold, he said, from 4830 to 4833. Why? Because this was the candle. This one here was the trigger candle. He did not know exactly, none of us can know exactly to the pip where a trade is going to come from all the time. But this here is the stop loss. 4838. Or should I say 4838, sorry, is the high. His stop loss was 4843. Well, what is 4843? That weekly level. Can you guys see that it's not magic? I wish I could say it was. Yeah, Ade put 4842 and missed it. Sorry, man. It happens. But you only should miss a trade like this if you're not at your chart and you set the limit and go away and then come back and something happens. If you can be at your chart, right? Hold on a second. What's going on here? Looks like my feed is chopping. Anyway, that's fine. If you can be at your chart, you don't need to wait for that precise last take a point. Right? If you're live and you know, and this is why it's important you know the rationale behind a signal. Like, I personally do not give signals to people who I have not trained in the setup behind the signal. There's no point giving you a gun and saying shoot if I haven't taught you how to shoot or how to pick a target. So, again, it's not rocket science. His entry range was from here to there. Basically, the low of the order block to where price, to the top of this candle, to the low of this order block was his entry range. Right? His exit, his stop loss, was that weekly high. Now, the truth is, he gave that to you because he wasn't going to be on a chart with you. He's trying to, and he and I have spoken about this before as to why I don't like giving these kinds of signals. Because you're predicting something that someone who doesn't have your expertise is going to have to figure out in real time. If he was on a chart with you, or I was on a chart with you, we would have said, hey, Hold, hold, hold. Okay, cool. Once we get to the top of this candle, put your entry in. Put your stop loss 2 pips or 2 ticks above this high. Now, because it's a scalp, right? Let's go down to a 5-minute chart. It's a scalp, isn't it? This is what it looks like on a 5-minute chart. Can you see this? We came from a 4-hour to a 15-minute. We're coming from a 1-hour to a 5-minute. On a 5-minute chart, there it is. There it is. That's the entry level, 4830. To there. So this is the entry range. Anywhere between here and there's the entry range. This was the stop loss. If I'm in this trade, I'm putting my stop loss here. I'm tightening it. And on a 5-minute chart, you can wait for a confirmation. Look at that. See that there? That's a 5-minute engulfing. There's your entry. Short. The moment it, like I said, the moment it crosses the candle it's engulfing, you don't need to wait for that candle to close. There's my stop loss. Where's my target? First target there. Right? That low there is the first target. Second target, that fair value gap being closed between there and there. And what do you know? It's tagged it to the pip. Look at that. That's the level we're working off, this level here. This fair value gap being closed. And price has tagged it to the pip. There's your trade. And because it is a scalp, if you want it to be bold and put, like I taught you, you can be conservative or aggressive. If you put the stop loss above that high just there, that's 5-1 in an hour. Okay, 2. It's 5-1 in 1, 2. Okay, 3. But technically, I mean, this trade. I mean, this trade's pretty, if you come out there, this reaction, then you come back, touch it, the next candle, and then still react again. I would have been out here. I'm not waiting for this. I'm not waiting for the extra 1 pip. It's 5-1 in 2 hours. That's the signal. Same principles. Liquidity, market movement. Anyway, all right. So that's gold. Let's move along very, very quickly. So, Ade, you were looking at GU yesterday and today, right? Okay, so, the GU doesn't exist. Of course it doesn't exist. GBP USD exists. My bad. All right, IC markets. So, now, let's look at you trade. Now, Ade, without me even showing you anything, can you see what the play here was based on what we've done in the last 1 hour? I think this live, for an hour 50, we've been live an hour 15 minutes. Can you see what the play is here? All right, so let's start from a 4-hour chart. To go all the way back. All right, so that's a 4-hour level. And in fact, these are what we call equal highs in price action. They're not exactly equal, but they're close enough that the same move that raids one of them might as well raid the second. In essence, two sets of people are going to have their stop losses there. I know you were taught in classical support and resistance to see that as a strong level of resistance. Quite the opposite. That's candy from a baby. There's the pattern there. Adi, can you see it? There's your pattern there. Now, the trade you sent me yesterday that you were a bit ticked off you missed was a scalp. And you can scalp these levels with success. Like I said, if you're scalping, we're going to a 1 hour chart, right? So that's our controlling time frame for a scalp. Okay, so on a 1 hour chart, there we go. We see an engulfing, right? There's the engulfing there. And so price comes back in. And so because the signals on the 1 hour chart, we're dropping to the 5 minute chart for our entry. Right? So I think this is where we were. So what are we looking for on a 5 minute chart? The exact same thing happened. We want to see high taken out. And then price break structure to the downside. Where does it break structure to the downside? Here, right? This is the first break of structure. In fact, if you want to be pedantic, it's just that on a 5 minute chart, I wouldn't be so pedantic. This is actually the first break of structure and change of character there, right? And notice that that level, that swing 5 minute low there controls almost to the pip the return. You could have taken the trade there, but it missed it by a pip. But it came back here and here. This trade was begging to be taken. Right? At what point does it engulf on a 5 minute chart? Clearly, well, the first engulfing point is here. That candle there. So the moment price breaks the low of this candle, and that happened there. Now, I am not a scalper by nature. This is why, because the lower the time frame you're trading on, the more false signals you're going to have. Okay, oh, Adi, that's good. So you got, 1 second, let's see. You got, all right. Okay, I see what you mean. So you were induced and then wicked out, but then you got back in and got 1 to 3. That's good. That's good. But I'm showing you how to have been maybe more precise and more confident about this trade. So if you got in there, if you put your stop loss all the way up at the controlling high, right? That's the safe way to do it. You would have made on this, no, where am I? Where was I? There. Okay. You would have made on this trade 2 to 1. It's not bad for a scalp. Now, if you're scalping, you're already being risky. You might as well just go for broke. Let's put it above that level there. That's the level of the break. Or tighten it there. But now see, it came back very, very close. You see this with scalps all the time. So let's put it back, say there. Right? Let's give it some breathing room from there. That's 3 to 1. This is the problem with scalping. Like I said, you will have several false signals. So you got your 3 to 1. Good. Problem is, what does price do? It reverses all the way back, takes this up, and then clears this new high all the way out You see this happen all the time because institutional traders are not looking at a 1 hour chart for their signals. They're not. So somebody with bigger money, maybe somebody with big money did this, and then somebody with bigger money did this. That's why I like to go off the 4 hour. It gives me some level of confidence that an institutional force is behind my trade. Because now if we go back and look at this here, and if we wait for the 4 hour engulfing, not the 1 hour, which then puts us in an intraday trade, not necessarily a scalp, right? Notice that we do get this, in essence, this one candle is a valid reaction pattern on a 4 hour. This is not. This candle comes up, this candle here does not engulf this one. But at this level, there is a valid 1 hour, a one candle reversal pattern. That's a doji. You don't need to wait for the next one. That's a doji. This, in essence, we have a signal. Now, how do we take our signal? Drop to a 50-minute chart. All right. Now, remember I said you got to train yourself to follow the rules even when the rules look scary. This here is a break of structure and a shift of structure. That's a low. That candle's low is lower than the next candle to the right and to the left. When price forms that low and then breaks through it on a 50-minute chart, we have broken structure. But if you're a scaredy cat, right, that's fine. Not a problem. Just wait for here. I think it is very clear that we've broken structure here, right? Very, very clear. Very, very clear that we've broken structure here. Okay? Price goes back up and engulfs. So you're in on this candle the moment it clears the low of that candle there, which also turns out to be the close of the candle anyway. Stop loss there, or take it back above that level, but there's fine. I think this reversal is very clear at this point. And so far, today, you would be 3 up, 3 to 1 up. Now, I think it's very likely that this retracement goes further down. I haven't looked at volume to be sure. Now, if you wanted to take this as a scalp, you can actually refine it further, right? You can refine it further, in which case your entry then tightens to there. This candle's engulfing of this one there. Once the candle closes, it closes below the close of this, or the open of this one. Stop loss there. And the trade now becomes 5 to 1 and potentially still counting. There you go. All right. I don't think I'm going to have time to do oil, but let's do EU very quickly. So I'm going to do it okay, I haven't looked at EU this week, but okay now. All right. Can you see this, everybody? Okay, so let's start from the weekly chart, because in my pre-week analysis, I would always start from a weekly chart. So you ask yourself, where is price at the moment, and what is going on at around that level over the last year or two? Okay, so As you can see, there's a high of a week there. That's the high of a week. Let's put it in black. And then price moving into that high of the week, there are two concentric order blocks, right? Means there's an order block there on a weekly chart, but that order block is sharing space with this order block here. Sharing space with that one there. So in situations like this, you just draw a zone that encompasses both of them, and then you can get rid of one. All right, so we're in there. So coming into this week, this is where we would have been. This is all we would have seen at the start of the week. We're in this, we're filling in a fair value gap, right? From this candle's high to this candle's low. But we're approaching a weekly high. So to start the week, I forgot I do this in all my other videos. The concept of picturing what the next day or week or month will look like as a candle, and using your entry and exit to try and fill out part of that candle. So we expect price to go there. That's juicy. There's going to be liquidity here and also in this zone, and we're still filling the fair value gap. So we expect price to move up. Well, if you're going to have a bullish candle, you expect price to open up, find support, right? Push up to a high, find resistance, and then close. So we expect the next candle to open here, come down somewhere, make a low, push up, take out this level into this zone here, find resistance, and then push back down and close. Or if it was going to be a reversal week, you would expect price to open up, find a high somewhere here, form resistance, push back down, find a low and close. One way or the other, we expect price to move up. Whether it's an up week or a down week, we expect price to start by moving up. Well, that's what we have here so far. So those are our key levels. I would also throw in the low of this week that's in the way here. And the low of this week is pretty much the low of that week, which is the order block. So don't need to draw it. Well, 4-hour chart. Do we see a signal in that range? Yes, we do. So the week opened up on a Sunday here, right? And gapped straight down and took out that intermediate 4-hour low. Same as NASDAQ, right? No messing about. Opened up and just gapped straight down. And then pushed up. Gapped and pushed up. This here in itself is a one candle reversal pattern. Why? Price gapped through a level and pushed straight up back over it. So that's the signal. How do we trade it? We go to 15-minute chart. Same story. And do the exact same thing. Okay, we're looking for a change of character. We get it here. Once price takes out that high there, comes back down into the level and forms an engulfing. That's your signal. You're in at the point this candle engulfs this one. Doesn't need to close. Stop loss is there. You could put it all the way down there if you want. I don't know why you would. Why you're trading a 15-minute chart for this reason, to be a bit more precise. And it's very clear here what the level should be. It's not one of those ambiguous ones. And where's your target? Well, the weekly levels. Level 1, 421. Level 2, 5.521. Level 3, 821. Now, there's all this up here. On a 4-hour chart, do we have any more clear levels up there? Oh, yes, we do. Look at this. Look at this, ladies and gentlemen. So, I want you to see this, right? Back in 4 or 5 weeks ago, there's a gap there. We've just filled that gap. That's what price has done today and yesterday. This 4-hour gap from 27th of February has just been filled, right? Okay. And that's what price has reacted to here. Now, we're looking at a potential short. We don't know. But notice, we've taken out that high, run through it, and put in a low. Put in a 4-hour engulfing. Could be. It's against our weekly bias so far, but we've completed the bare minimum of that weekly bias. So, because we're in Thursday, I'm going to wait to see what happens in New York. If this was Friday, I would be more confident taking it because it would be the weekend retracement. But we've done what we needed to do in EU this week. If you were trading EU, I didn't trade EU this week. But if you're doing, it's 821. Step aside. Enjoy your week. All right, folks. That's all I can do right now. It's been live being with you. Thank you. If you want to be part of the Telegram channel, the details are at the bottom of your screen. It's free. Do we have stuff that we would like to sell you? Oh, yes, we do. But this is free. This is for you to come in and just get a taste of what we are about, and then potentially see if you think you would benefit from us before we start talking about getting some money out of your pocket so we can get some more money into your pocket. Have a great week. Take care. Bless you. Bye. Bye.